There are big changes coming. Starting May 25th, FHA will no longer allow non-permanent resident borrowers. My dad, he's like, I'm never getting rid of this house because I have a 2.5%.
There's a lot of other options out there for borrowers. What I like about the ITIN is that it allows for gift funds. We're combining two of the best teams in the industry together. I think one of the biggest misconceptions about non-QM is that they're paying a premium to do a non-QM loan. Here at AD, we have our prime and super prime non-QM products, which are good options for non-permanent resident aliens.
Hi everyone, Serena Diaco here, and welcome back to the Digest by A&D Mortgage, your trusted source for insights into the mortgage industry. There are big changes coming. Starting May 25th, FHA will no longer allow non-permanent resident borrowers. What does this mean for our partners? What does it mean for our borrowers? And how do we respond? Today, we have National Sales Director Rich Hoffmann, who is a loan expertise to help us and guide us on how to turn this challenge into an opportunity. As always, we reviewed your comments, especially those who work with immigrant and foreign communities. You asked, we answered. Let's dive in. Hi Rich, great to have you here in the studio. I know you must be extremely busy with the recent acquisition of Flagstar and all of these changes.
Yeah, no, we have been very busy, but we're excited. It's been a lot of hard work on behalf of both teams. We're combining two of the best teams in the industry together. Our legacy Flagstar team has been in the government and agency space for over 35 years, and so combining that with the #1 non-QM lender in the country is really powerful. So we're really excited about the opportunity, working very hard, and we can't wait to see what the future holds.
So Rich, some of our partners have shared some concern regarding the change coming May 25th. FHA changing their guidelines on allowing non-permanent residents. Since we have been getting stronger in government and agency, how do you think this will affect us?
I don't think it'll impact us too much. There's still a lot of optionality out there for borrowers. I don't think it's changing anytime soon. Long term, maybe we'll see. But in the meantime, there's a lot of other options out there for borrowers that we can talk about as well.
Can you give us an example of maybe another option?
Sure. So first and foremost, Fannie Mae allows for non-permanent resident aliens. As long as you're here legally and you have a Social Security number or an ITIN number, you can get a Fannie Mae loan. Additionally, here at AD, we have our prime and super prime non-QM products, which are good options for non-permanent resident aliens. And then we also have our ITIN product, which is a great option as well. What I like about the ITIN, which is for people that don't have a Social Security number, is that it allows for gift funds. So a borrower can simply have as little as 5% of their own money and get the rest of the contribution as a gift for their down payment. On top of that, for foreign investors or foreign buyers, we even have your DSCR product, which is available for both of those options as well.
Yes, and the alternative income option, especially if not qualifying going Fannie. We have the option for those ITINs to choose bank statements, to choose WVOE, et cetera. So some great options that we have. Who should our partners be looking out for who may be disqualified for this rule? Like what kind of profiles are we looking to really be affected by this?
Yeah, so non-permanent resident aliens are by definition, are individuals who are here for a specified purpose or a specified period of time. So for example, maybe they're here on a temporary work visa, for example. And there's a plethora of visas that we issue here in the United States to individuals that are here for a specified purpose or a short or extended period of time. Those individuals, by definition now, are no longer eligible for FHA financing.
That list of visas, there's like about 40 to 50 that we allow non-QM. Like there are so many that we do allow, at least going non-QM, and they can go up to 90 LTV.
That's correct.
So very close to FHA.
Very close. I mean, you're still off a little bit by, percentage-wise, but there's still options out there.
So now, since we've kind of been talking non-QM and bringing it up, if we run into a non-permanent resident situation who really does want to qualify FHA and maybe is against going conventional, let's talk non-QM options. What do you think is the best? What are benefits of going non-QM for these borrowers?
I think one of the biggest misconceptions about non-QM for people that aren't familiar with it is that they're paying a premium to do a non-QM loan, and that's just not necessarily the case. So there's a lot more optionality with non-QM. There's still low down payment programs. There's programs where with non-QM where they can receive gifts, as we mentioned earlier. But I think even more importantly, interest rate wise, for many non-QM loans, you're in the same ballpark that you would be for a government or agency loan, which is surprising to a lot of people that aren't familiar with it.
I've seen very similar rates nowadays compared
Correct.
to what I used to hear.
Yeah.
My dad, he's like, I'm never getting rid of this house because I have a 2.5%.
Yeah.
I'm sure non-QM is very far off from the 2.5%. However, nowadays, when we're looking at conventional and agency rates compared to non-QM, not too huge.
That's true. I mean, there could be scenarios where there's layered risk, and in those, you could certainly have a situation where your interest rate might be a little bit higher, but by and large, for your average non-QM loan, that's just not the case.
For brokers who haven't worked too much with non-QM, what do you think is a good way to, I guess, get them informed or maybe speed up that learning process for them?
I think the best thing, quite honestly, is to reach out to your local AD representative, account executive, and schedule a demo or presentation and have our folks walk them through the benefits of non-QM, have them walk them through the product set and do a presentation for their staff. But additionally, with zero access to our site, you can go right to admortgage.com and you can pull your product highlights, your product matrices, your full product guidelines and sets, and there's training there as well available for all of our customers or future customers.
So Rich, now that you're with A&D, what do you think makes us broker friendly and really help us close those deals?
Well, I think it's a couple things, but I think it starts, we securitize our own non-QM product, and I think it really starts there because there are product guidelines, right? We control the entire process from the products that we offer, the guidelines themselves, the pricing. And I think that's an advantage for us because that's not common in the marketplace. The second thing is, the technology behind it and behind our offering, right? We have an amazing platform which helps our customers as well. And then speaking of technology, we're the very first in the industry to offer non-QM AUS, which is a game changer because I think to the extent in which that involves, it's going to take a lot of the guesswork out of the equation for the customer and help that originator get that borrower going down, the right path the first time early on. So I think that's a big thing. And then I think our support staff does a great job. And then lastly, I think our underwriters do a great job because there's many times where a loan comes in and maybe that loan, for whatever reason, changed course or something happened between submission and while that loan was in, underwriters are able to offer different alternatives or solutions to help make sure that those loans get closed. So those are the biggest things.
Great things. Having the partner support, huge. Yep. Available almost all day long. And then regarding underwriters, I just recently had a deal that we thought, was going down.
Yep.
And they gave us another alternative solution to save it. And there really wasn't much difference in pricing, just a little bit of a switch of a program, and we were able to help. So I do really love that about our underwriting staff as well.
Absolutely.
And to wrap things up, what's one piece of advice you would give to a broker in this fast changing, or maybe not fast, but changing market?
Yeah. It's always changing. It's never the same. That's the one thing about our business, right? But I think the one thing that's probably most important right now for originators is to make sure they are in constant touch with their borrowers. The industry is consolidating, and especially from an aggregator perspective, to the extent in which the originator can make sure they're not just communicating with the borrower over the course of a year and staying in touch with them, but finding ways to add value to not just the transaction they're doing, but the household and what their goals are going forward. I think they'll be in a great spot because if they're not staying in touch with their borrower, I can promise you somebody else is.
Great piece of advice. And thank you so much for being here today, Rich.
Oh, thanks for having me. It was my pleasure. Thank you.
Have a great day.
You too.
Thank you. That's a wrap for today's digest by A&D Mortgage. Thank you so much for tuning in, and thank you, Rich, for sharing your insights. These changes are not easy. However, they're not impossible. Brokers who stay informed and flexible can succeed. And with the right partners and the right tools, our brokers will win big. I will leave you with one final thought. Do you think this change marks a real turning point in access to home financing in the United States? Be sure to leave a comment and keep the conversation going. Like, subscribe, and as always, take care and see you next time.